And I have the distinct pleasure today of introducing Stephen Maloney, who's the CEO of Tanzanian Gold Corp. Thanks for joining us today live there, Stephen.
Yeah, no, thank you, Sebastian. It's a pleasure being here today, and thank you for the introduction. So I'm the Chief Executive Officer of Tanzanian Gold, and we're going to go over what our company is and what we're about and where we're going. A few key takeaways as we get into the presentation we're going to talk about today: our substantial, fully permitted resource, our new and rejuvenated management team, the expansion of our oxide operations, our potential for resource expansion across our special mining license, how we're going to go about developing our sulfide project, and of course, I'm a junior mining CEO, so our attractive valuation versus our peers. With regards to who we are and where we're located. So we are located in the Lake Victoria Greenstone Belt. In that region of Tanzania, there are other major mining operations. Barrick has its Tanzanian complex in this area. AngloGold Ashanti has one of its major mines, Geita, in this area. I believe it produces over 400,000 ounces per year. OreCorp's development property is also in this area. So there's been large mining operations in this area for over 20 years. It's built up a very robust human capital aspect. We can access our property by driving to site. So except for the last 10 kilometers, we get there by fully paved roads. There are transmission lines in the area. Our site is connected to the national power grid. There's a new hydroelectric facility going in Tanzania. The power lines for that are within 10 kilometers of our site, so there's a very good infrastructure there. Our Buckreef project is fully permitted, as mentioned earlier. It's a high-grade open pit resource. We currently have over 2 million ounces of 1.8 grams a ton in the measured and indicated category, another 635,000 ounces at 1.11 grams a ton. So we're starting off with a very significant resource in a major mining area in a greenstone belt, which typically leads straight for metallurgy, which we have, which I'll get into in a second. What is our business plan going forward? First, 10% of the resources are on the oxides, and we have the opportunity to mine those oxides first. It's a cap upon our sulfide layer. We currently have a test plant on site. That test plant, as we released results last week of it, we've consistently achieved 90% recovery rates in a normal grind CIL process over the last 2 months. So that's very successful. We're expanding those operations to 360 tons per day or 15 tons per hour. That expansion is predominantly complete and will be operating in early October. From there, we're going to expand the operations to well over 1,000 tons a day, or 40 tons per hour plus. And that will happen over the next 6 to 12 months. We're evaluating our business plans around that. We'll come to the market with our business plans around that over the next couple of weeks. We've been successful in our 360 ton per hour day build. We're evaluating various options to how to build out those operations, including building it ourselves and the EPC contract. With regards to resource expansion through exploration at Buckreef, the new rejuvenated management team was very comfortable coming on board for the resource upside of the Buckreef main zone. Since then, we've looked at the property. We've had discoveries of 2 new shear zones, one at Buckreef West, which is adjacent to our main zone, and another one in the Anfield zone, which we'll get into in a second, which is very exciting with very high-grade grab samples from that region. We also have exploration potential between our Anfield zone and Bingwa, which has been underexplored, and we have historical deposits at Bingwa and Tembo. And so we're going to look at the whole SML from an exploration perspective as well. Also, as I mentioned, 90% of our resources are in the sulfides. We have a very robust sulfide project to develop over time. It's not a matter of if we're going to develop the sulfide project, it's a matter of when and how big. And that's what we're evaluating over the next 12 to 18 months. We had a good preliminary metallurgical study from SGS that indicated a straightforward flow sheet in a flotation, regrind, and CIL. We were getting over 90% recoveries in that from the first initial 3 holes. There's currently a drill rig on site doing the PQ holes for the advanced metallurgical study that will look at the deposit over the next 5 to 7 years of production. Those holes should be predominantly completed in the next month or so, and then we'll get those samples off to SGS for the metallurgical study for the next 6 to 9 months. We're going to evaluate a phased approach to development of these assets. The resources have doubled since there was a robust PFS done on the property in 2018. And we're going to assess, both a phased approach and a single build in this. And we'll be doing this sort of approach and study over the next 12 to 18 months. So I mentioned a refreshed and experienced leadership team. So I joined in December 2020. Andrew joined us on the board at the same time and joined us as Chief Operating Officer. Sorry, I got it wrong. He can't take my job, but he is Chief Operating Officer. He has well over 30 years experience. Michael Leonard joined us as CFO in March of this year with experience in Barrick. Khalaf Rashid joined us in May of this year. He handles our government relationships on the ground. He also handles our CSR programs, very experienced Tanzanian businessman with the proper connections. On the ground at Buckreef itself, we have two very experienced, young, energetic co-general managers. Gaston started off in the region working, went and worked with Teranga in Senegal, has also worked with Barrick and AngloGold Ashanti in this region, is from Mwanza. He's experienced in plant building in his previous roles, and he's a very good set of hands for our expansion, particularly around our plants. As I mentioned, we have a very robust exploration program underway and a lot of potential around exploration. Isaac is a geologist trained by the same individual that trained Andrew when he joined at AngloGold Ashanti, moved throughout the world in increasing roles, now is back home. So we're very pleased today to be 100% Tanzanian on our assets on the ground. Andrew travels the site quite a bit. He's been over 100 days in Tanzania this year. I've been there 5 times. Mike Leonard's been there twice. So we have a very well-rounded team with all the right disciplines that are getting a lot of things done extremely quickly. And we'll get into that in a second. So when you rejuvenate the management team, put in place the proper structures, it's amazing what you can accomplish. With regards to our 15-ton upgrade or 360 ton per day upgrade, as I mentioned, it's 10% of the resources. This is a project that we've developed in the spring. We've executed this really in a 4-month period from ordering of the ball mill to where we are today, to getting into production around this site into October. The capital cost of this asset was budgeted between $1.3 and $1.6 million. We're on budget with regards to that. This operation will produce anywhere from 750 to 800 ounces as per our Q3 guidance at a cash cost of roughly around $750 to $800 an ounce, essentially making the Buckreef operations cash flow positive, which will then be reinvested in the ground. As I mentioned, we'll be expanding this operation over to 6 to 12 months into 1,000 tons per day or 40 tons per hour operation, which is capable of producing 15 to 20,000 ounces of gold per year. The first couple of years of that mine plan will be in the 20,000 ounce range. That is currently for a 5 to 6 year mine plan. But as I mentioned, we have a lot of exploration potential, so I assume that this will be larger over time as we discover more resources. So very excited for this project. It's a very high return project for a management team that wants to get down and look at projects, make sure that when we're spending capital dollars, that we're spending it on high return projects. As you can see here, the pit is open, a lot of crushed ore at site, ball mills on site, tanks are being constructed, all by local contractors, electricity is being upgraded, tailings facility is well advanced. We're really excited for this project, and we look forward to moving it forward in October and the expansion of it. Now, this one always brings a good smile to my face. So, as I mentioned, we were excited for the Buckreef main zone when we joined. The Buckreef main zone is open to the northeast, to the south, and at depth. And we're working with our consultants. We've identified high-grade chutes, so we'll eventually go underground as well. As our COO, Andrew, likes to say, the last hole in the northeast is 1.8 grams a ton at 200 meters. At a 50-meter width, and it hasn't been drilled up to surface. So we're very excited for what we have in this main zone. What you see here is a 2018 pit shell. We're going to infill, drill this, bring out that saddle, and confirm and convert a lot of resources the reserves. That's part of our drilling plans in the next 6 months. Buckreef West, we have drill holes here. What we need to do is infill those, and there will be both oxide and sulfide resources there. There's an infill drill program is laid out, and we'll bring to the market more information on that in the near future. The Anfield Zone. This is one of the ones where we like to say, in a new rejuvenated management team, we kick the geologists out the door. Get out there. Figure out what's on our SML. And when we did that, we noticed a lot of artisanal workings about 500 meters to the east of our main zone. And when we go in and evaluate that, we see those workings, and the artisanals are currently not there, given there's a minor river valley there. There's one grab sample that we took from 30 meters underground. It came back at 37.5 grams a ton. Other gram samples, one was 28 grams a ton. Another one was 14 grams a ton. There has not been a drill bit put in this yet. And so we look very much forward to looking at this. This is a 2.5 kilometer strike length on it. We look we're very excited to what the potential of this may be. Maybe our main zone isn't main zone. Time will find out. With regards to an underexplored SML and region, as you can see on this site here, you can see the various, you can see our Buckreef West, our main zone in the middle. You can see the Anfield Zone in the white, Tembo and Bingwa to the side. We need to explore what's between Anfield and Bingwa. All the shear zones are going parallel to each other. That's an underexplored area, and we'll explore that over time. With regards to our sulfide project development, as I said, we're coming off a robust 2018 PFS in which the resources were half of what they are today. And what our goal is here is to make that study a much bigger study to the tune of 3 to 4 times the size of the 2018 PFS. So what we're doing here is we're converting resources to reserves. As I mentioned, we have an infill drill program underway, currently doing the PQ holes. Then we'll move on to this, doing that sort of drilling for the conversion of resources to reserves as well as expansion. We had a very robust, preliminary MET study as well that took 3 holes. We're now moving that and advancing that. PQ holes should be drilled by the end of the month. Then we'll have it go off to SGS. They'll look at a couple flow sheets. Obviously, we'll look at, just doing it CIL. We'll run our sulfide ore when we get to it through our test plant as well, figure out can it be CIL'd. But also, the float, regrind, and CIL flow sheet too is also straightforward flow sheet. So, we'll evaluate both of those sort of options. We're also going to evaluate a phase development. So, can we do this in such a fashion to get it up to producing 150, 200,000 ounces per year over a phased approach? Go 3 to 4 years as opposed to one time. And we'll evaluate both of those and the capital requirements and the amount of shares that would need to be issued, if any, as we look at that phased approach and how to finance that. But that's all work to be done over the next 12 to 18 months. Obviously, I just mentioned we want to increase the annual production. And there's also all the other work that you would do for a major mining project. The site layout has been finalized. We know roughly where we want to put things. We need to do the geotechnical work and finalize that. We need to do the groundwater and water balance studies. We're comfortable with the amount of water on site, but we need to verify that. We're going to evaluate the tailings characteristics. Our preliminary metallurgical study was non-refractory, non-preg robbing, also non-acid generating. So that makes us look at dry stack tailings, good from an ESG perspective, and doing other things such as species at risk. As I mentioned earlier, as a junior developer, we believe we're undervalued versus our peers. But more importantly, when I look at this, is if we continue to execute, build out our assets, put in place high margin, high return projects, the valuation spread between us and our peers should start to narrow. And also as we continue along our development, we should get the re-rates from continually going up the curve from a valuation perspective. So, I would say we're undervalued today. Also, there's probably a good re-rate from a Tanzanian perspective. We're very pleased with how things are progressing from a Tanzanian policy perspective. And we've seen a significant change since arriving in January to today, and believe the country is more and more investable by today. And with regards to, where we'd like to get to finally. So the slide here shows a lot of mining assets around the world with similar types of flow sheets. The grade profile, the cash cost profile. We took our grade profile from our PFS and our resources, as well as the cash cost from that study. Look, we have a significant resource here. We have good grade, so we should have low cash costs. We have straightforward metallurgy. If we can get down into that category, a lot of these mines are owned by a lot larger miners than us, then we'll have done our job and created a very significant mining company. That's our aspirational goal. So key takeaways, I mentioned these at the front, but before I get into that, the ESG and CSR, we take very seriously. It's one of the things I feel a little bit uncomfortable talking about, because there's certain things that should be just ingrained in your management philosophy. Both Andrew and myself and Mike come from backgrounds of very strong ESG and CSR, and we have a robust program on that. As you would have seen, we've donated school desks, we've helped schools, we're very serious on water. Something that I don't want to dwell on too much, because it should be part of your normal operations. Safety first. We have a great safety record. We don't have any downtime this year as a result of any accidents. Very pleased that the guys on the ground take it extremely seriously. We'll be starting to publish the relevant metrics around all of this in the near future, and this is part of the management philosophy we do have. So essentially, look, we have a substantial permitted resource, as I mentioned, over 2 million ounces in the measured and indicated category at 1.8 grams a ton. Have a very new, rejuvenated management team, getting a lot of things done, good bounce in their step. We're expanding the oxide operations very quickly, and I'm very excited for that operation. It's a CAP, so it's essentially a pre-stripping operation that provides cash flow for the sulfides. We got a lot of potential exploration and resource expansion on this property. Look very much excited for the drill bits on that. A little bit of the unknown, but that's the excitement of it. The sulfide project development, not a matter of if, it's a matter of when and how fast we do that. And so stay tuned for as we develop that over the next 12 to 18 months. Attractive valuation, probably a good entry point versus our peers on where we're trading today. Re-rate potential as we develop, and re-rate potential on Tanzania becoming better. And a timeline on what you'll see coming up. We're commencing our exploration drilling campaign, PQ holes in the next 30 days. It already started. And we will also start the exploration program broader, expansion of the oxide operations over the next 2 weeks, as well as the 40-ton oxide plant, and finalization of our sulfide development plan. And I'm going to leave the audience with this slide here. This is all the action at Buckreef on the ground in the last 4 months. So I'm very pleased and proud of this slide. As you can see, a lot of very clean core shed, CIL tanks all constructed on site. If you were looking at today, a new picture, you'll see the platforms getting ready to put the pumps and agitators on. One of the schools that we renoed, drill bits on the ground, ball mills, liners, tailings facilities, platforms for ball mills. Very excited for what's happening here at Buckreef. So I'll leave it at that and ask the audience if they have any questions.
Maybe I'll jump in with a question here. So obviously you're discussing sort of oxide production as well as sulfide development. What kind of metallurgical test work do you run into when you're talking about oxides and sulfides on the project?
Yeah, so the oxide test work that we did at our plant is what we wanted to do is get a consistent grind size as well as a consistent retention time. So originally we had, the plant was being operated for production. And so you wouldn't get the consistent grind size, and the retention time was around 17 hours, which is just too low for a CIL plant. So what we did is we reduced the throughput to 2.5 tons per hour. Got a consistent grind size of 75 microns passing 80, increased the retention time to 30 hours, and then we get consistent recovery rates of around 90% plus. So that's the work that we did, and that lines up to certain things on the sulfide feasibilities. So sulfide study that was done by SGS last year. It was a flotation, regrind, and then CIL for a similar type of retention time. And, you know, 2 of those samples came back 94 plus, and another one around 90%. So we were very pleased with that. But also what they did do in that study is they did look at CIL. When you had 75 microns passing 80, you got a similar type of recovery rate as we got on the oxides. And so we'll look at both of those flow sheets.
Well, much appreciated, Stephen. I appreciate the presentation and you being here in person. And with that, we'll give a hand for Stephen and Tanzanian Gold.